U.S. 30-year yield reaches year-to-date high after poor auction. The U.S. 30-year yield climbed to its highest level so far this year Wednesday after poor demand for an auction of 5-year notes, a week before the Treasury is expected to announce a heavier borrowing schedule for the February to April period. The longest maturity Treasury yield rose more than 5 basis points to nearly 4.42%, its highest level since December 4. Yields across maturities were already higher on the day before the $61 billion auction at 1 p.m. The likes and dislikes of the BOX Yawner. The Bank of Canada left all policies unchanged as expected. BOC guidance pushed back on nearer-term cuts again, wiping out March. The BOC's confusing two-faced approach to hike risk. How a boring, unchanged set of communications could soon go wrong. Federal Reserve Board announces the Bank Term Funding Program, BTFP, will cease making new loans as scheduled on March 11. The Federal Reserve Board on Wednesday announced that the Bank Term Funding Program, BTFP, will cease making new loans as scheduled on March 11. The program will continue to make loans until that time and is available as an additional source of liquidity for eligible institutions. ECB to keep pushing back on rate cut bets despite anemic growth. Frankfurt, Jan 25, Reuters. The European Central Bank will keep interest rates unchanged at a record high on Thursday and is likely to push back on investor bets for aggressive policy easing this spring, despite recession risks and a rapid slowdown in inflation. The ECB ended its quickest rate hiking cycle in September but has been adamant that even discussing a reversal would be premature, since price pressures have yet to be fully extinguished and crucial wage talks remain ongoing. Rates spark, tame inflation still not enough to trigger a March rate cut. U.S. 5-year auction was rough, but Thursday's core PCE should be tame. What then? Likely yields lower, but only temporarily. The ECB takes center stage with Lagarde anticipated to push back against early rate cut pricing. That may just mean staying away from speculating on timing entirely. What could be a bear flattening impetus if Lagarde disappoints markets? Thank you.